Listen, you'll have a few bounces along the way, I'm sure of it, but at the same time, I will be awaiting an interested swing trader at around the $75,000 level, all right? And again, maybe a little bit below that.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway, a market strategist, unveils fresh insights on Bitcoin's latest dip and the broader crypto drop in this video, covering key price catalysts and potential recovery signs. Let's watch.
Bitcoin, we know that Bitcoin had some major technical damage, and it is on the decline again today. So let's go to the big board and take a look at this. And what we see right here, guys, take a look. So Bitcoin again, we closed below 92, we confirmed, and we're seeing continuation to the downside. And this is what we always fear, right? Well, you don't necessarily fear it unless you're long. But point being is that when a support breaks, especially a support that we've kind of bounced on so many times, over and over again, right? Over and over again, that wall is getting weaker and weaker. And when it gives way, essentially this is building energy in here. When it gives way, it has a tendency to fall very sharply. And now we're trading right around, looks like 86,000. Not that far away from the next major support around 75 to 74,000, which is this trend line right here. Let's talk some Nvidia here as we get into the charts. We have earnings today scheduled for about 4:20 p.m. I'm going to walk over to the big board here so we can look at this chart. The biggest thing to me, you have these two trend lines that have been keeping Nvidia kind of in check basically for the last 6 months to a year, right? So it's a lot of ups and downs. You've had big swings on Nvidia. In fact, right here was that day where it was down 17% in one single day. We recovered off that back to gap fill right here, and then it was rejected. Now you're coming into a very pivotal report, not just for Nvidia, but for the entire market. The reason why it's so important for the market is we know that the driving force behind the market has been this momentum trade in AI, data center, all of these other things. Now, if Nvidia can come through with great numbers, then the stock could rally up. First resistance is going to be right here again, right around 143-ish, give or take. Okay, so that would be first resistance. If by some chance they blow the numbers out so much that the stock goes even higher, 157 would be my next level. Now, on the other side, let's say they disappoint. This is kind of the really bearish case for the market if it did happen. If we come down to 119, and we're trading right now pre-market about 130, so it's about $11 lower. But if we break 119 here, which will be support, but let's just say we break it, now you've broken what we'll talk about as a long-term trend, right? The long-term trend on Nvidia would be broken. And honestly, at that point, I'd start thinking that the August lows of $90 would be back in the cards on Nvidia. Now, a lot of you guys would look at me and saying, okay, well, where's the trade here? Do we go long into earnings or do we go short into earnings? And I'm here to say that for me, I'm not doing either because I don't have a good read. Look, you're not at support and you're not at resistance. You're kind of right in between here, right? So the idea is that unless you can look at this chart and imagine you're presenting a thesis in front of a panel of the best traders in the world, and you can justify that trade based on X, Y, and Z, not like, oh, I think it'll go up or, oh, I think it'll go down. That doesn't cut it in this world of trading. You have to have factors. Factors would be like, oh, it just hit gap fill. It just went into a key support, 618 Fibonacci retrace. You know, you want multiple factors like that. Then there might be a trade going into earnings. Aside from that, what I'm going to do is I'm going to watch this in the earnings trader, which is now part of the Smart Money Stocks and ETFs service. We're going to be trading this in the after hours, but we're going to trade the reaction. So if it pops here, we might go short, or if it gets up here, the same thing here, we might consider going long or a double bottom right down here around 115. But ultimately, I want to trade the reaction because I don't have a good enough read about what is going to happen on the announcement.
Bitcoin has extended its losing streak for a third straight day, hitting lows not seen since November 11, 2024. At one point, BTC flirted with $82,256, but analysts warn that further downside could lie ahead. With the crypto fear and greed index plunging to 21, traders are rattled by fresh tariff threats from President Donald Trump aimed at the European Union, which also dragged traditional markets lower. Coupled with mass outflows from spot BTC ETF, these factors have taken a heavy toll on confidence. Independent analyst Scott Noker points out an oversold RSI on the BTC/USD chart, suggesting a potential bullish divergence, but confirmation remains elusive. While some call this dip a generational buying opportunity, others caution that the selling pressure might not be done. Major metrics such as the S&P 500 also declined when Trump announced 25% tariffs against the EU, and a new memo hints at possible mass layoffs in federal agencies. This anxious environment has led to a sea of red across the board, with some traders bracing for a fall to the $80,000 to $71,000 zone. If that support cracks, Bitcoin could revisit levels that haven't been seen in months, leaving investors eager for signs of market stability.
And we can see here that for the most part, markets are slightly higher, right? This was yesterday's big dip early. You chopped around. Look at this trend line down here. I'll show you in a minute where that comes from. But then you bounced up and you kind of chopped into the end of the day. Overnight, we were floating up, and now we're kind of chopping with a little bit of selling here just over the last 20 minutes on this intraday S&P chart. So again, markets are trying to bounce just a tiny bit after some pretty nasty selling. A lot of the big names, Oklo, Palantir, APP, all of them getting hit in the last few days. Tremendous big drops there. Now remember this trend line. I want to show you where this comes from right here. If we flip over to the daily chart, take a look at this. So this trend line is what we just saw on the intraday from yesterday. Look at how we tagged that line. Now, this line goes all the way back basically to lows from last August, and again, connects right through, and that was the low yesterday. We went down to the technical level, and sure enough, you can see we got a tail there, not a bottoming tail, mind you, but nonetheless a tail, and then markets today right here, we're trading up just a little bit. So, getting a small technical bounce, that's very normal. Why? Because, again, even if the markets are starting to turn more bearish, you still have buy the dippers, you still have sentiment that is relatively good. But yesterday we did get consumer sentiment numbers, and again, this is consumer confidence, and it was basically the worst consumer confidence in 4 years. So the consumer is starting to feel the pinch, the worry about tariffs, inflation, the economy, all of these are bubbling up. And that is going to eventually take a cut out of the economy and the jobs numbers. And we'll see those jobs numbers, I believe, next Friday. We'll have to see what they are showing us. But nonetheless, S&P 500, very clear right here. We came down to this level and got a nice little bounce. The question is, how high do we go? Do we rally up here and then turn down? That would be kind of along the lines of what I'm looking at. And just to give you guys a sense of how I'm analyzing this, I'm taking the high here. This is the all-time high on the SPY or S&P. Taking the low, and generally if we get a solid bounce, you look for about a 618 Fibonacci retrace, and then generally that's where the market could reverse to the downside.
Bitcoin endured a steep correction over the past few days, plunging from nearly $100,000 to a new 3-month low of $82,000 on Wednesday evening. This massive move suggests that the bears have seized control once again. One prominent analyst, Martinez, points to the weekly chart's RSI, which indicates a bearish divergence that could mark the beginning of a more prolonged downtrend. The largest hack in the industry and controversial economic policies from President Donald Trump have further rattled the markets, undermining Bitcoin's attempts to recover. The latest dip alone wiped over $17,000 from BTC's value in less than a week. Some market participants wonder if this substantial decline represents a prime buy the dip opportunity. However, Martinez cautions that the metric measuring traders' realized loss margin is only at about 8%. History shows that the most promising entry points have typically arrived once that figure exceeds 12%, suggesting that more downside might be in store. Until that threshold is reached, it could be risky to assume the market is poised for a swift rebound. Even though Bitcoin's volatility has often paved the way for quick price recoveries, the current outlook remains uncertain. Caution may be the best course until further signals emerge. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.